Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks for Wednesday, June the 4th. And I'm starting off with African Potash, where you can see that there's been a recovery of sorts here. The higher low for May above 1.5 pence after the double bottom over 2013 towards that level. Rising trend channel can be drawn from September as well. The top of that channel currently pointing to 4.5 pence, which is the top of the range that we've seen since the autumn, 2 pence to 4.5, and a little bull flag here either side of the 50-day moving average at 2.5 pence. There's also been an RSI uptrend line in the oscillator window, multi-tested over March to May around the 30 level, and then the breakout through neutral 50 in the last couple of weeks. So all this is very constructive. And the view now is that at least while there's no end of day close back below the floor of the channel from November at 2.3 pence, we'd be looking for further upside. If you're cautious on the stock, maybe you'd wait for an end of day close above the 200-day moving average, which is currently rising at 2.87 pence. But what's noticeable here is that we had a cross below the 200-day line last month when it was still rising between the 50-day and the 200-day line, as I said. And the next cross is likely to be a golden one going into the end of June or early July. So set fair at the moment on the technical front at African Potash. Set even more fair at the moment is Leni Gas Oil. This is a stock which I've been commenting on over the past few weeks, and really what it looks like here is that we're getting an acceleration, significant acceleration to the upside. Initially spotted around the in fact, below the 1 pence level, a little bull flag there above the 200-day moving average. Current situation, it looks as though we're in a very wide rising trend channel from the beginning of 2012, and that has its upper parallel resistance line going up to 4 pence plus. Obviously, with the RSI currently at 94, you wouldn't expect the shares to do that in a day, but it's doing pretty well nevertheless at the moment. Probably the best way forward here is to regard former 2 pence resistance from 2012 and 2013 as the initial support on any pullback. Ideally, we'd see a pullback towards 2 pence over the next few days, but then a 1 to 2 months target up to 4 pence plus, maybe as soon as the end of June or into July. Finishing off with another real favorite at the moment, and that's rare earth minerals. Here we've got the rising or the resumption of the autumn spike. Took a long time. There was a bear trap, extended bear trap below the 200-day moving average and towards the 50-day moving average over the past couple of months, but we broke through that with an unfilled gap, as yet unfilled gap to the upside. Bull flag to start June, and really while above the gap at 0.69 pence and the 10-day moving average at that same level as well, you'd be looking for further upside. 1.5 pence remains the target on a technical basis while we stay above 0.69 pence. That's it from me for now, but more updates on spreadbetmagazine.com, and you can download my latest trading guides there as well.